Trading method part 18, I believe this is 19. This is part 19, right? So we have relative strength index set to default, commodity channel index both set to defaults. We buy for $2 at 5 seconds. Candle time period set to 5 seconds. Also, we wait until purchase deadline, which is at 5 seconds, and then we buy or sell. Right? We wait. Right. So, give me a second. I think here buy for two and we wait. Right. Even if this trade loses, we do four, and four gives us back $1.93 profits plus the $2 we just think if it loses. But if it doesn't lose, we go back down to two. Make sense? I think it does. I think that is very straightforward. We trade for 20 minutes, so T40 50. So we would stop at 440. Oh no, 450, right? Our first trade for the day one, which is a good thing, right? So we go back down to two and then we trade again, right? Wait for the last 5 seconds to make a trade and then we trade, right? So we buy here for two and we wait. And that's one trade every minute. I mean, you don't have to, but I mean, it works that way. That's how it works, right? So we wait. So we buy here for $2 since the other trade won. Right, this 2 1, so 33 and 34 they both won. So that trade also won. So in 3 minutes we made one, two, three, $4 and let's say 80 cents. 1, 2, 3, yeah, $4.80. We did that in 3 minutes, so you get the idea. So here we buy again for two because both indicators CCI and RSI are above their halfway point, above the 50. So we buy, right, and we wait, right? Next in line would be four if two loses, but it's okay for two to lose, right? Yeah, Clem. The meat truck, she said. Yes, Christine. Hello, meat. They want to come and they want to cut. I was telling them. Yes, so that trade won. So we go back down to two and then we start again, right? We sell here for two and we wait, right? And that's just how the trading method works. We sell because the indicators are under the halfway point. We buy when the indicators are over the halfway point. Simply that. So this is the start of the first rally for the day, which is a good thing, right? So we then do four and we wait. And it's okay if four loses because we do nine, and we know that nine gives us back. It came up just now, but let's check it here. Nine gives us back $8.84, and four and two is six, so it'd make $2.84 profit off that trade. And I was just about to say we don't have to do nine, but we do have to do nine. So since both indicators are down, we sell here for nine at the 5 seconds, and if nine loses, we do 19, and that's if it loses. If it doesn't lose, then that's also a good thing. So nine loss, good. We just do 19. And 9 and 1 is 10, and 4 and 1 is 15. So $2 and 15, 16, 17, 18, $3.66, which is a good thing. And as you can see, the markets are moving 18%. So 9, 8, 7, 6, 5. We buy here for 19 and we wait. And if 19 loses, we do 41. Ooh, yeah, it did peak here. It peaked. It went over our 200. That's okay because it's strong. So we have a strong uptrend, a strong bull. Right? Right. So that's a win. That's a dub. Right? So we buy here for two and we wait. And even if two loses, we do four and so on and so forth. Nice. So yes, because how the trading method works, you just repeat that, and you on screen right now we have what I'm following: 249, 19, 41, 87, 184, and 391. You follow that when the market is moving in the day. You avoid, this is actually down, but I bought here. That's okay though. It's under, but I bought. That's okay. I will watch the one up on top. Right. So yeah. So yeah, this is going to be the last trade because the rain is coming down. At last, so we finish this rally, and this is just how the method works, right? This is infinite trading method. Right, so 765, we sell here for 9. We're not gonna make the mistake of buying again, and we wait. Nice, right there. That's it. Nice. So yeah, this is going to be the last trade for the day. This is infinite trading method, part 19. This has been your host Shamoy GG. Right? Wait. You know, you should like, comment, and subscribe. Don't click off this video and not like, comment, and subscribe. You feel me? Bye.